Welcome back, everybody. Mary Shapiro of the SEC wants to stop the inequity caused by trades that give some brokerages an advanced look at orders. Now, you just heard Joe Saluzzi applaud the decision to ban these flash trades. They've really been lightning rods for controversy in Washington, also on Wall Street. Let's head to Wall Street right now. Suzanne O'Halloran at the New York Stock Exchange with a broker's perspective on these practices. Suzanne, over to you.
Thanks very much, Carol. I am here with Justin Schack of Rosenblatt Securities, an institutional brokerage firm. Justin, thanks for swinging by the exchange. First take, give us your opinion on the flash trading ban that we're learning the SEC will likely implement.
Sure. Thanks for having me. I think flash was a practice, or is a practice, that in our view has a lot of benefits for the exchanges that do it, for the brokers who send orders that way, for the people who receive these flash orders. But for the end customer, there really wasn't a lot of benefit to this. They were basically getting the same price that they could get out in the market if they were hit a displayed quote. The exchange would hold up their orders so that some other people could look at it first and decide whether or not to trade with it. And the end customer was not getting a better outcome, but all the other people involved in the trade were potentially getting a better outcome. In some cases, an investor could get a better price, but our suspicion is that was happening very infrequently, so it's probably a good thing that these are going to be done away with.
Okay, high-frequency trading, totally different thing, but it is getting lumped in with flash trading. This is powered by algorithms and computer trading. That's getting a lot of heat, but you wrote an op-ed piece in the Financial Times on August 2nd in defense of it. Why are you defending it?
Yeah, I think what we're trying to do is present a more balanced view of high-frequency trading. The market has changed so dramatically in such a short period of time, and high-frequency trading in, say, 4 or 5 years has become a dominant force in the U.S. stock market. And I think that's causing people to feel unsettled and to criticize it, and maybe they don't fully understand it. I'm glad that you said that flash is completely separate from high-frequency. We believe that high-frequency traders were probably receiving quite a bit of the flash orders, but according to our data, in the month of June, flash trading was only 2.4% of all U.S. stock trading. We believe that high-frequency trading, apart from the flash process, is about 2/3 or more of all U.S. stock trading. So it's pretty clear that what high frequency is doing outside of the flash process is the vast majority of their activity. I also believe that, and there are a lot of other people in the market who believe that they bring more benefits to the market than some of the complications that they bring to people who aren't used to dealing with them.
Right, but the critics, Paul Krugman, the Nobel-winning economist, wrote in the New York Times that if you don't have one of these computer programs, then you get left out, and that is the average American, perhaps the average shareholder. I mean, what do you say to that? He's not wrong, right?
No, I think he is wrong. I really like Paul Krugman's work otherwise, but I think on this issue he is dead wrong. I think what a lot of people don't get about high-frequency trading is that the vast majority of what they do is in publicly displayed markets where they are quoting the best available prices. They're tightening the spread between the bid and the ask. And that's a good thing for all investors, for retail, for institutional. Our clients, who are the big mutual fund and hedge fund managers who are managing the little guys' money and pension money, they get a massive amount of liquidity from these high-frequency firms that wasn't there or was there in a different form years ago, and they get to execute at better prices. High-frequency has made the market more efficient, not more democratic. I mean, you have to make adjustments, and it's, you can make investments if you want to trade that way.
Okay, thanks for sharing your thoughts. We got to wrap it up. Our thanks to Justin Schack. Handing it back to you, Carol.
All right, Suzanne, thanks so much.